So you probably read that slide by now. Let me go over some of the highlights of what I think are some of the more important drivers that could push gold up and therefore push gold and silver stocks up. So in my opinion, there's an everything bubble. Stocks are high. Bonds are in a 37-year bull market now. Cannabis is high. Real estate is getting overvalued again. We have a very real valid threat of an everything bubble that could pop. Investors typically go to the dollar or to cash or to bonds or whatever, but they ultimately will go to gold if an everything bubble pops. Remember the movie Something Wicked This Way Comes? Well, there's a lot of things out there that a lot of people are very worried about right now. Here's some of them. These are people that are in the industry that are very successful. I like the giant vampire squid quote there, i.e. Goldman Sachs. We either face a slow pain or a fast pain in the equities market. You don't get more mainstream than Goldman Sachs, and that's what they're saying. Gold typically rises in dollar bear markets and in crisis. We also have the fear of a debt crisis. Debt is higher no matter what levels you look at, what factors of debt you look at, whether it's government to consumer. All of debt levels are at extreme highs right now. And the reason this is important is because studies show that the higher a country's debt level, the more financial shocks that country experiences. So with our debt level at this extreme high, we have to understand that there could be some serious financial shocks that come our way. You can see there that total global debt now is $250 quadrillion. It's 318% of global GDP. The inflation threat is real. There are people that are in the mainstream that are very worried about inflation. Some have been worried about inflation for a long time, but sooner or later, that reality is going to play out. I think that obviously inflation could be a major catalyst for the gold price. I like the last quote there. If inflation returns to account for all the money that's been printed, as I believe it will, I see a future where gold is valued between $2,000 and $10,000, perhaps more, and gold stocks appreciate 5 to 10 times their current value. There are many quotes like this from people who are not necessarily gold bugs, but are saying this. The US dollar is at risk. This is a trader who's been working in the currency markets for 40 years. We should see a very substantial decline in the dollar, about 40% against the euro by 2024. Ray Dalio, the world's largest hedge fund, there's a risk of 30% depreciation of the dollar over the next 2 years. The IMF said in their Q3 report just last quarter, the US dollar share of global reserves has fallen 6 straight quarters. As I think this audience knows, gold and the dollar are inversely correlated. Dollar goes down. In every single dollar bear market, gold has risen. Central banks are in binge buying right now on gold. It's not widely reported, especially in the mainstream, but they're buying gold at binge levels. Poland's been buying. Hungary, look, 10-fold increase. Kazakhstan, Mongolia, and not a lot of people know this, but Russia now officially holds more gold than China, $80.5 billion. You have a sovereign wealth fund that's been buying for the first time. You have Japan's largest bullion retailer seeing gold bar sales are skyrocketing. Central banks are still repatriating gold, Austria, Germany, Netherlands. And meanwhile, all this is going on, you have numerous central banks that are selling U.S. treasuries. They're listed all there. They're bringing back gold from their home country, from other countries back to their own country. Yeah, I got to keep moving along. I only got 20 minutes. So you can't talk about gold without talking about China's influence on the gold market. There are numerous things developments that are taking place. When you see a headline that talks about Hong Kong, imports into China are down, that's a very misleading headline because that's not how a lot of gold transports into the country any longer. There are numerous things that you can see that are going on. The one I'd like to highlight is the second to the last bullet point. Chinese gold companies have now invested $4 billion overseas since 2011. Not 4 billion in assets inside China, 4 billion in mining assets outside of China. Their influence is growing. In my opinion, gold's time is almost here, but don't take my word for it. John Hathaway, Tocqueville Gold Fund. We believe the gold market bottomed in August. RBC, this is actually from their wealth management division. We see a change in the perception of gold. The Hightower report. We believe a long-term low is in place for gold and silver. Bank of America, Merrill Lynch, you don't get any more mainstream than that. Gold is regaining its prominence as a portfolio hedge. You have a Switzerland Financial Advisory. At $1,200, gold mines are breaking even, so $1,200 is the bottom, in their opinion. A trader at Kitco there, we think the lows are definitely in for both gold and silver. I like this quote from the CEO of Aaron Resources. The opportunity to buy gold companies at this low point will never be seen for another decade. Okay, so let's talk about gold stocks. Just how cheap are they? In my opinion, and it's not just my opinion, it's actually factual. They're actually at their cheapest point in history. This is the Barron's Gold Stock Mining Index and its ratio to gold, to the gold price. You can see it's at its lowest point in 78 years, the Barron's Gold Stock Mining Index. The FTSE Gold Miners Index, it's the most discounted to the S&P 500 in 20 years. The HUI, similar reading compared to the S&P 500, that ratio, it's at an extreme low. This is GDX. Since inception, you can see it would have to rise 250% just to match its 2011 high. That arrow pointing to that little uptrend right there is a triple in the index. We will definitely see that again. Credit Suisse. On a forward PE basis, gold stocks are trading close to all-time lows. I bet you didn't know this. 11 of 12 U.S. mining stocks hit a 52-week low last month. That's only happened 3 times in 25 years. For you data wonks, gold stocks are now more than one standard deviation oversold. If you're not a data wonk, that's a lot. Adrian Day, he's been doing this a while. Valuations for the miners are at their best buying opportunity in 30 years. And yes, ladies and gentlemen, gold stocks are literally cheaper than dirt right now. What I did here was I took the market cap of each individual gold company and I divided that by their gold ore reserves. The reserves, not resources. And it came out with the price per ton. You can see Goldcorp is $3.42 per ton. Yamana $3.78. Newmont $4.54. Topsoil, mulch, and compost, all those things are more expensive right now than gold stocks. Topsoil, mulch, and compost are sold by the yard. I converted this to tons, so we're comparing apples to apples. Mid-Cheers are cheaper than dirt. Eldorado, 88 cents. New Gold, 53 cents. Alamos, 25 bucks. All cheaper than any form of dirt you can buy right now. Silver stocks are also as cheap as dirt. 75 for First Majestic, Fortuna 82, Silvercorp 41. Those are a little higher, but you can see they're all lower than mulch. And you know what mulch is, right? Mulch is decaying leaves and bark. Decaying leaves and bark are more expensive right now than silver stocks. Even the royalty companies are cheaper than dirt. You can see Royal Gold at 680, Wheaton there. The point to all this is we have an extreme undervaluation in gold stocks. An extreme undervaluation means we have an extreme opportunity. This is a chart of all the gold bull markets in modern history. The average return is 5 times your money. But we have such an extreme undervaluation right now in gold stocks, and with the risks I pointed out earlier, gold might shoot higher than it has in past bull markets. If it does, what kind of return on money do you think we might get? All right, let's talk about stock picks. First of all, should you even listen to me? How did my picks for May do? I spoke at the Vancouver conference in May. These are the 3 picks I gave. Gold mining, you can see it's down, so is gold. Equinox, if you look at a chart, it's about the same price as when I recommended it in May. But we got some free shares in Solaris Copper. They're not free trading yet, but you add in that value, we're actually up on the position. And there's Silvercrest Metals. They're up 52%, even though silver is down a lot. So if you bought an equal amount of dollar amount in all 3 picks, you'd be up 39%. Okay, so what gold stocks should we focus on? That's kind of important to talk about. Mergers and acquisitions are coming in the industry. As Mayor Katuza says, majors need new deposits. The CEO of Silvercrest has publicly said the growth profiles of most seniors is little to none. They have to start acquiring projects, and there's not a lot of them. I like this quote from this fund manager: large cap miners are looking more at M&A to increase their resource base. The bottom line is majors are desperate. There was a junior that was financed with one project, early stage, 2 drill holes, and a major came in and financed it. That shows you just how desperate they are. The point is, let's focus on developers, explorers, and project generators to get the best bang for our buck. Who do I like? Here's pick number 1. I got a bunch of them today. This is the largest personal holding of Louis James. If you might remember, I worked with him at Casey Research. He now has his own company, independentspeculator.com. He's been doing this a long time. I can personally attest to his ethics and his analytical skills. He's been to this property twice. He's been to the region a dozen times. So with all that experience, his largest personal holding right now, wouldn't you like to know what it is?
Yes.
Drum roll. Believe it or not, it's Pretium Resources. Now, why is it Pretium? Because Pretium's been around a while. It's not a new story. First of all, it's cheap. You can read about the scandal that I think was a faux scandal, but that made the stock a little bit cheaper. There's probably another discovery there, and I'll show you that in a minute. Keeping with our theme, Pretium is also a prime takeover target. In Louis' opinion, this is an easy double or triple from current prices, which is about $8. And you can get more from him at independentspeculator.com. This is a map of their area. The blue is the reserves. The black is current production. The green and the pink is all wide open to explore yet. That's how big this project could get. So yes, there is a lot of exploration potential that could still be realized at this deposit. Okay, pick number 2. I want leverage to the gold price. When the gold price starts to move, who's going to give me the most leverage? I'm going to recommend gold mining again. I think it's even cheaper now. The company's doing exactly what they should be doing. They've made 7 acquisitions in 5 years. They have the second largest asset base in the Americas now. It's run by Amir Adnani, a top-tier executive, in my opinion. As he said, the company will shift from Vikings to farmers as soon as gold gets to $1,400. The stock is dirt cheap. It's valued at $4 an ounce in the ground now. It was $40 an ounce in 2016, and it had fewer properties then. There are very few gold companies with this size, leverage, and diversification, and a deeply undervalued stock to boot. They have a senior listing in Canada they just got. They're looking to do the same in the U.S. The leverage will kick in when the market turns. In my opinion only, this stock is a potential 10-bagger. I also like pre-producers. Why? Because they have very predictable stock patterns. You may have seen a chart like this before. This one's from Frank Holmes. You see the red circle there. If you buy at the construction decision and you hold it until the first pour, in other words, we have an asset, we're going to build it, we're going to put it into production. That run-up, you have a 90% chance of a 90% return in the stock. This is what the data shows. A 90% return and a 90% chance of getting that return in that time period. So we want to focus on pre-producers. Who do I like? I like a lot of them, actually. Here's one, Pure Gold, and they're here. Why do I like it? They have the Madsen project in Red Lake, Ontario. It's high grade. It's a good size. Look at that IRR, 47%. You don't see that a lot. It's in a pro-mining jurisdiction. It's near term. They're going to go into production next year. They will be announcing that fairly soon. They're a compelling gold developer. You can read all the reasons there. I do like the CEOs, the geologists are going to keep exploring. In my opinion, the stock could double between now and first pour. It's highly prospective for further discoveries. That's their land package all in black there. You see they have 3 new satellite deposits, 14 drill-ready targets. The bottom bullet point, they're going to be drilling 10,000 meters just this quarter alone. Who else do I like? Bonterra Resources, they're also here. There's their stock symbol. I like them because they're going to go from 0 to 3 producing assets over the next 2 years. This graph, the yellow is development, the red is production. So you can see next year, they're not going to put 1, but 2 assets into production, a third one by 2020. We're at the sweet spot for them right now. This shows how cheap they are. I don't have time to go through it, but basically it shows that they are cheaper than any other Canadian developer right now. So this is a good time to buy the stock. They're definitely dirt cheap. It's also worth speculating on promising explorers, in my opinion, keeping with our theme. As Marinus said, there's not been a world-class discovery in a number of years. This fund manager says, we're not finding gold, we're mining it faster than we can find it. And get this, we spent $4 billion a year exploring over the past 5 years. We got 10 discoveries of 59 million ounces. But last year's production was 107 million ounces. So 5 years of exploration only led to a half year of production, of global gold production. What that means is promising explorers with real assets are going to become extremely attractive and very coveted. Who do I like? I like several. Here's one, GFG Resources. There's their symbol. There's two reasons why I like it. First, they have 2 district scale assets. Not just 2 projects, district scale assets. They're in the Timmins Gold District. They also optioned Rattlesnake Hills in Wyoming to Newcrest. Newcrest is a major producer. Newcrest agreed, after they looked at the property and evaluated it, they agreed to a 9.5-year spending plan. The industry average is 7. So Newcrest obviously sees a lot of potential there. It's a compelling explorer. You can read all the reasons there. The second reason I like them is because their valuation. Valuations are always tricky because it depends on your assumptions and all the kinds of things like that. But let me throw this out at you. If Newcrest spent some money under the agreement, it would get 75% of Rattlesnake, okay? That would value the project at the $133 million. GFG keeps 25%. That would value their 25% at $33 million. The current market cap is $23 million. And this excludes all of their Ontario projects. Dirt cheap. Insiders bought 1 million shares. If there's a discovery made, and it is an if, this stock could easily double. This is just a quick map of all their properties. That's Wyoming on the left. That's Ontario on the right, all the projects they're looking at. Prospect generators have a special advantage right now. Think of prospect generators as the R&D arm of the mining industry. I like that way of thinking of them. Rick Roll, arguably the biggest player in our industry, has said the setup in prospect generators is probably the best I've seen in my career. That's saying something. The bottom line is deals are getting easier to do. Interest is growing. This is a prime time to get into the prospect generators. Who do I like? There are several. There's a couple here I like. I also really like Renaissance Gold. They're in Nevada. If you read this chart, I don't have time to go through every bullet point, but you want what makes a good prospect generator. There are several factors, and these are all the factors, and this is how Ren Gold measures up to all those. They got multiple targets. They're in Nevada. Partners spent $2.1 million last year. They're spending $3 to $4 million this year. They have the ability to attract partners. They have the ability to attract investors. If you didn't know, Rick Rule's a major investor in Renaissance Gold. And you can get a better price than he got. I love that. And it's undervalued. It is dirt cheap. It's an $8 million market cap. I mean, come on. 27% is held by insiders and partners. The stock is in strong hands. This is a quick map of Nevada. It shows all their properties there in the red spots. The yellow are the ones that are all in partnerships right now. So in my opinion, I love to speculate on gold stocks, and I own a lot of them. But I acknowledge that there are risky times ahead, and I think it is important that we all own a sufficient amount of bullion. GoldSilver.com, who I work for, is one of the 5 largest dealers in the U.S. We have scale, a price match guarantee, one of the most educational sites in the industry. That's the arm of the company I work for. And Mike Maloney and I have written a book. The draft is done. It'll be out next quarter, so look for that. It'll be pretty good, in my humble opinion. And last, a brand new episode of Hidden Secrets of Money. How many of you are familiar with Mike Maloney and Hidden Secrets of Money? Brand new episode tomorrow night. It's actually going live. It'll be a live presentation tomorrow night at 5 o'clock, right when the conference ends. So you can tune in when the conference is over. Check it out at goldsilver.com or our Gold Silver YouTube channel. I wish I had more time, but I'll stay in the back if anyone wants to chat. Thank you very much.